Hello, I'm Andrew Roberts from Property Investor Reward Club, and I'm here with Nick Hope from Hope Property Finance, the local experts to the Great Property Meet. And I believe you're going to update us today on first-time landlords and how they can get some great deals through you for property finance.
Yeah, absolutely. Really, what we're looking at, what we're going to be talking about today, is really just how, as a first-time landlord, that you're going to get on that property ladder. Obviously, I know you might already have a property that you own.
Yeah.
But sorry, excuse me. But as far as investing goes, we're just going to look at a couple of different scenarios and sort of some questions that you need to perhaps ask yourself and some tax advisors.
Yeah.
So when you're thinking of investing, one of the big questions really that you need to start asking yourself at the moment is whether or not you're going to be investing in your own individual name or whether you're going to be investing in the name of a limited company. And that's the question that you shouldn't necessarily have with your broker. It's one of those questions that you should be asking your tax advisor, because they're the people that can give you the expert advice that you need. But things to consider between the two from a finance perspective is, as a broker, is if you're purchasing in a limited company name, one of the good things that with that is you get a lower stress test. So what the stress test means is the rental income that you get compared to the theoretical interest rate that the banks and builder societies work on to make sure that the mortgage is self-funding. And with it's a limited company and it's a business loan, then they stress it at a lower rate, which is good news. On the negative...
That's a benefit to
absolutely.
being a sole trader or a partnership landlord then.
Yeah, definitely. It's for borrowing a limited company name gives you that extra ability.
Get more cash.
Yeah, you can potentially get more cash out of the deal. You'll be able to borrow higher loan to values, but on lower rentals.
Yeah.
So that's definitely a positive. Some of the negative points: you will pay a slightly higher interest rate. There's no way around it. Or if you're borrowing in a limited company name, typical interest rate is around about 3.5%. The lowest interest rate that you're going to get is about 2.89, which is quite a chunk higher than if you were borrowing in individual names.
Okay.
And also what you've got is a lot fewer lenders to choose from. It's a very specialist marketplace that they operate in, which is why it's all to do with risk and reward and why the lenders feel that they can charge that extra little bit of interest rate.
Okay.
But the main benefit for borrowing in a limited company name is all around the better longer term taxation prospects that you've got, which again, as I said, you need to talk to your tax advisor about. But you've also got the benefit of inheritance planning. So if you're thinking about leaving a legacy for your family, there's ways of planning a company to move as and when you decide you want to retire or whether you're going to die. Before then, you can get that plan so your children can become directors or whoever it is, and it stays completely out of your inheritance with regard to taxation planning. So that's a real benefit. So that's limited companies covered off very, very shortly. What you've also got then is if you're borrowing in individual names, because you still get huge amounts of applications from people that are borrowing in their own personal names.
Okay.
And you've really got to, rather than one size fits all, you've really got to look at from your own personal situation with regard to taxation as to whether or not the additional costs of borrowing a limited company are for you or not. So if you're borrowing it in an individual name, some of the things that you want to consider is that there are a lot more lenders available for you. So you've pretty much got the whole marketplace available. There's a couple of sort of stipulations within that. The main one being your earned income away from property, but as you're just starting out. So if you've got an earned income of over about 25,000, you're going to have pretty much every single high street lender wanting to lend to you. And the interest rates on the flip side of that are a lot lower, and they're 1.75 is probably the lowest. 75% deal that's available out there.
Supply and demand, a lot of competition in the marketplace. Sole trader lending.
Yeah, absolutely. And if you
can borrow less.
Yeah, you've got a higher stress test, which is the downside. But if you the 1.75 compared to the 2.89 in a limited company, that's over 1 point. lower, so it can make a significant saving over that period of time.
Mhm.
So you've just got to bear in mind the two different things, and obviously we've already mentioned the downside is the longer term taxation planning.
Yeah, superb. So, can first-time landlords buy HMOs?
Yeah.
You know, is that possible for first-time landlords? Because I've heard a lot of people say, "Oh, first-time landlords, there's no access. You've got to have 2 years' experience and a number of properties under your belt."
Yeah, very much so. There are still some lenders out there that will definitely lend to you as a first-time landlord on a HMO basis. The thing that you need to set out is really what your demographic target market is as well.
Okay.
So if you're thinking, right, I want to lend it on a room-by-room basis, if it's actually a student let,
Yeah.
so anything generally up to sort of 5 students, all sharing the same house, then actually that doesn't fall in within a HMO category. It's a whole separate category that the majority of lenders will actually lend to.
Okay.
So you can still get access through the likes of Coventry Building Society, the Godiva, who are the traders at Godiva, you have BM Solutions, and you'll have a huge range of lenders that are all more than happy to lend on student lets. So make sure you tell your broker exactly what it is that you're trying to achieve and who it is that you're letting to, so he knows what lenders are available for you. You also still have the opportunity to be able to borrow, despite what some brokers might tell you. You still, as a first-time landlord, you can still get funding for an actual HMO being let to individual people on separate ASTs. It's available typically at 75% loan to value, but you can push that up to 80%.
Yeah.
You're not going to, as a first-time landlord, you don't have access to the 85% loans that are available, but at 80% loan to value, still with a really good income yield coming from a HMO, it's still definitely possible to do. There you go, if I can put the teeth back in. So yeah, some fantastic opportunities out there for you if you're just setting out.
Okay, superb. Well, if you want to know more detail on all of that, then Nick will be talking at the Great Property Meet tonight, and he talks at the Great Property Meet every third Monday of the month.
Yep, and here every month.
Dunchurch Park Hotel. He's a brilliant resource to tap into and a fantastic broker that we'd highly recommend you use. So by all means, come down to the Dunchurch Park Hotel, third Monday of the month. I'm Andrew Roberts from Property Investor Reward Club, and we're helping you to make savings on your property business in all the areas you need. So thank you very much, Nick. Once again, a brilliant update on some real hot topic subjects for people who are new landlords looking to get hold of property finance, and some great advice there. Thank you.